Meta Platform and Constellation Energy just announced a pretty cool partnership, kind of driven by the demand of AI solutions. Now, we can see pre market Constellation Energy is up about 12.5%, as there are some very, very bullish sentiments for this stock in the overall press release. So, in today's episode, what I want to do is just take a closer look at this kind of partnership and share my overall thoughts. So, let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
On June 3rd, Meta and Constellation partner on clean energy project. So, a quick takeaways, Meta is excited to announce a 20-year corporate nuclear energy agreement with Constellation Energy. Separately, they continue to make progress on their nuclear RFP process and have identified a short list of potential projects they are evaluating. So, kind of just talking on that second point, their nuclear RFP process is about a year ago, maybe a little bit shorter than that. Meta opened up this kind of ecosystem and said, hey, if you have any innovations, any products, any solutions that can help us grow more and more energy, as we need a lot of energy for AI data centers, this is the way you're going to get our attention and the way we're going to be able to find out which potential projects we want to continue to move forward. So they are making this update that progress is going really good. They've gotten a lot of attention, and now they're kind of picking out potential projects. But now back to this kind of Constellation Energy. So they are announcing a 20-year corporate nuclear energy agreement with Constellation Energy for the Clinton Clean Energy Center. Nuclear energy from the project will be used to support Meta's operation in the region. So first thing we can see is just AI demand is so hard that this company wants to continue to grow and have optionalities of where it can grab that power from, and are in final discussions with a short list of potential projects with that RFP, their nuclear request for proposal process, to meet their 1 to 4 gigawatt target. Now, I want to say that's such a wide range of target that they want to meet. I mean, one gigawatt of data center powers is going to be insane in the future, but 1 to 4, that is a crazy range. If we get closer to that high 4 gigawatt range in overall potential projects, that can continue to show and solidify that the AI market still has so much demand. Now at Meta, they are building AI technologies that are transforming the global economy and the way people connect. Their data centers enable these innovations, housing the infrastructure that brings these technologies to life. And they prioritize operating their data centers efficiently and also cleanly. As we look forward, our future energy needs in advancing AI, we recognize the immense value of nuclear power in providing reliable, firm electricity. So again, now there are a lot of nuclear pools, and this is one of the reasons, right? Data centers aren't going anywhere. Meta is not the first to kind of really talk about nuclear power. We're going to see in a bit that there are a lot of companies that have signed some form of agreement to help the growth of nuclear power. So there are a lot of nuclear investors that look at this and find this pretty bullish for their overall thesis. Now, there is a reason, right? This company worked with Constellation on this project, and right now, a lot of these nuclear plants have kind of been decommissioned and are kind of turning off, or they're only living off the life of maybe a few credits that the government is providing and eventually will end. And that's exactly what was happening here. As we have embarked on understanding and helping to grow nuclear energy in the United States, we have heard from across the ecosystem that existing nuclear power plants will not be able to stay online indefinitely without partners and investments that help extend existing operation license and increase generation capacity. Keeping an existing plant operating will have the same positive effect as adding new clean energy to the grid. So here we can see that Meta Platforms has a decision. Hey, should we partner up that someone that is going to be losing, that has a plant operational right now? Maybe we don't need it at the moment right now, but we can start kind of paying some partnership starting in 2027, as we're going to see. And in starting in 2027, we help that plants stay alive. The reason being, in the future, if we do need this plant, we have it available to us. But more importantly, if this plant closes down and we need to help open up a new plant, get all the licensing and everything and all the process to reopen the plant, opposed to just having it stay on indefinitely is more beneficial for them to partner up, right? So this plant was expected to have their own agreement with the United States kind of end in 2027. And now in 2027, Meta Platforms will help ensure this critical plant will stay online and meet growing energy needs, and adds 30 megawatts of incremental capacity to the grid and allows Constellation to explore further nuclear developments at the site. So overall, I mean, this is what I consider just more bullish sentiments for the AI space, right? This is not something that for me would make me go buy more NVIDIA or buy any more AI companies than I already do, but it just gives me that validation that, look, my thesis that AI market is going to continue to grow is validated, right? This validates it. What other reason would Meta Platforms have to make this partnership if they don't see the massive energy that they need in the future? Now, we are going to look at Constellation earnings, Constellation Energy's ratios and valuations in a bit. We can see the stock is up about 12% as I am recording the episode. But before we go any further, if you want to support the channel, there's 3 easy ways. First, check out whatthechip.com, my free daily semiconductor newsletter. Second, make sure to hit the thumbs up and subscribe button. I'm trying to hit 75,000 subs by the end of the year. I'm hoping you can help me. And third, make sure to check out the pinned comments, as I do have some cool special promotions there. Now, kind of going back into the overall nuclear plant, I wanted to kind of see Meta's wider energy and infrastructure push in the past 12 months. So one of the things Meta is trying to do is kind of either replace some of its energy usage with clean energy, and sometimes not replace it, right? Just offset it. If they use 100 energy of 30 energy, they want to create 100 clean energy per se. So they, in the past few months, they announced things like wind solutions in Oklahoma, various solar solutions. They also have this nuclear advocacy that they joined Amazon and Google in the pledge to triple nuclear capacity by 2050, signaling big tech intent to finance both SMRs and life extensions, and overall the evolution and capital expenditure of AI. Now, what I wanted to do next is kind of just look at some metrics for Constellation Energy. I mean, the energy industry is not one that I personally invest in, but I can definitely see the excitement right now. First, we can see revenue growth. We can kind of maybe see a kind of an uptrend happening. Not every quarter, but I do feel like we are seeing maybe some steep increase since Q2 of 2023, which is here in forms of revenue. What I really wanted to look at is forward PE ratio. So forward PE ratio for the next 12 months for this company is about 31, or the end of this fiscal year. For fiscal year 2026 is 28.8. This is probably the reason I wouldn't invest in these companies, is I feel that I can get growth companies in the semiconductor space that give me valuations cheaper than this and have more growth potential. Now, obviously, the semiconductor is probably a lot more riskier, a lot more volatile, and the revenue might not be as safe, or the earnings might not be as safe as here as Constellation Energy. So I also understand the other side of the story, but for me, I'm more of a growth style investor, and for a growth style investor, I want to see some nice growth in the revenue, and I also want to see that valuation not be as crazy, right? I mean, like I mentioned, NVIDIA is probably around these valuations at the moment as well. So a question for me would be like, why would I buy this over NVIDIA if they share kind of similar valuations? Now, again, I mentioned that every investor is different, and every investment has different volatility ways and kind of taste on their overall portfolio. A highly volatile stock like NVIDIA, dependent very much on the AI space, might not be one to consider. The other thing I do want to mention is, at the moment, a lot of the energy plays are somewhat movement to the AI market, right? Because a lot of the growth opportunities for these come from the AI space. So if the AI space does slow down, it does kind of create a negative pressure for the stock. So I would say just because you think you're buying energy stocks, it doesn't necessarily mean you're completely divesting from the industry. I mean, you can see the perfect example here is I'm gonna guess here in January 24th over Monday, January 27th was when we heard the DeepSeek issue, and on that day the stock dropped nearly 20%, and it hasn't returned to those all-time highs just yet. Maybe after this announcement is getting close to it, but you can see that this stock is very volatile depending on AI data center needs. So even though it's an energy company, you're not completely offsetting your exposure to the AI space. So if you already have a lot of AI companies, I personally do. So one of the other reasons I wouldn't buy Constellation Energy. But we can see, I believe we're going to get a lot more projects like this coming out from the company itself. So take care, have a good day, and see you all next time.